Good day, investors. On Monday, January 26th, Eastern Time, U.S. stocks opened higher and maintained gains throughout the session, with all three major indices closing in positive territory, ending the previous week's losing streak. Markets remained cautiously optimistic ahead of the Fed's interest rate meeting, as tech and bank stocks took turns to prop up the market. Meanwhile, Trump's new tariff policy and government shutdown risks loomed, adding uncertainty to short-term trends. Key closing data showed solid performance. The Dow Jones Industrial Average rose 313.69 points, or 0.64%, to settle at 49,412.40, hitting an intraday high of 49,488.81. The S&P 500 gained 34.62 points, or 0.50%, to 6,950,023, approaching recent highs. The Nasdaq Composite advanced 100.12 points, or 0.43%, to 23,601.36, with the tech sector providing key momentum. Trading was active, with Nasdaq turnover reaching $331.46 billion, and risk appetite rebounded significantly from last week. Sectors showed structural divergence. Most large-cap tech stocks strengthened. Apple rose 2.97%, Microsoft gained 0.93%, and Meta climbed 2.06%, all supporting index gains. The AI industry chain was mixed. CoreWeave surged over 5% after NVIDIA announced expanding cooperation and investing $2 billion to help build its AI factories. In contrast, Intel fell 5.72% for a second day, with dim earnings forecasts continuing to weigh on the stock after last Friday's 17.03% plunge, dragging the Philadelphia Semiconductor Index down 0.39%. The financial sector rallied across the board to boost market confidence, with top investment banks including Morgan Stanley, Goldman Sachs, and J.P. Morgan Chase all gaining over 1%, benefiting from improved profit expectations amid high interest rates. However, healthcare stocks plummeted after hours. CVS Health fell about 12%, Humana dropped over 13%, as the White House proposed keeping 2027 Medicare reimbursement rates unchanged, below market forecasts. Most Chinese concept stocks declined, with the Nasdaq Golden Dragon China Index down 0.63%, and only a handful like Li Auto and PDD rose against the trend. Multiple macro variables intertwined. Trump announced raising tariffs on South Korean goods such as automobiles and lumber from 15% to 25% for failing to implement trade agreements, escalating geopolitical trade tensions. More notably, the probability of a U.S. government shutdown surged to 78% after the Senate rejected a Homeland Security funding bill, increasing short-term market volatility risks. Precious metals pulled back after hitting new highs. COMEX gold futures rose 0.50% to $5,004.8 per ounce, with heightened volatility after setting records. Fed policy remains the key focus. Markets widely expect the January FOMC meeting to keep rates unchanged in the 3.50% - 3.75% range, with Goldman Sachs forecasting the first rate cut in June. However, Trump hinted at soon finalizing the Fed chair nominee, coupled with the DOJ's investigation into Powell, escalating debates over central bank independence and adding uncertainty to the policy path. UBS warned that an AI bubble burst could trigger a 50% recession probability, and markets are underestimating the urgency for the Fed to cut rates early. Looking ahead to Tuesday, January 27th, Eastern Time, markets may trade sideways in consolidation, awaiting key data and earnings. Key watch points include, first, U.S. November housing price indices and January Consumer Confidence Index to test economic resilience. Second, earnings from Boeing, United Health, and others kicking off a heavy earnings week. Third, progress in government shutdown negotiations and Fed officials' comments to avoid sentiment-driven volatility. Strategically, focus on core earnings targets this week, particularly guidance from tech giants like Apple and Microsoft. Deploy into rate-sensitive financial stocks on dips, while hedging geopolitical and policy risks with gold stocks. Control positions in the short term. Avoid policy-impacted sectors like healthcare, as uncertainty ahead of the Fed decision may cap upside potential.